This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Dollar higher as expected. We are over the 98 line in the sand. Not a surprise. Risk off, right? We've got dollar higher. We've got gold higher. Silver not as much. Why I really prefer gold, but nonetheless, we're going to have some profit taking for sure in some areas. The gap down in equities. So if you had protection into today, congrats. There will be some monetization in that 68, 67, 75 area. Again, these are for folks that have short duration puts. They're heavily hedged. Remember, the market is hedged even before this event, which is why I really am glad that you are. But the point is, dollar higher above 98 as expected, gold higher. We've got some shake and bake here this morning when the market opens, but equities are also lower, both SPY and Qs. Yields were already falling in kind of this deflation impulse, or I should say the bond market pricing out the run it hot scenario as we have stagflation, a little bit of contraction with rising prices, basically a bull flattener, also driven by reduced supply. And I think it's also bonds are that bid or proxy in defensives, which I already called. So TLT to 91, that kind of thing. And then, of course, all eyes on the oil market. We did reach, and I will show you just a second here, the 75. Here's your crude, right? So this was the binary bet. We escalate, no taco, and he's now trapped us. I mean, everyone's angry about this. There's no one who supports this. He has no idea what he's doing, et cetera, et cetera. There will not be regime change in Iran. The Ayatollah, very much a martyr right now, 86, prostate cancer. He's going to die anyway. The whole family's out. The whole country's enraged. Lebanon, Kashmir, riots in the street. It only emboldens their anger towards Americans. So this is definitely a blowback, and it's not going to be a one and done. Nope. No part of me thought that 2 weeks ago when I wrote Iran risk is not priced in, and I followed up last week, and then I followed up Friday and again this weekend. So there's just no part of me that this isn't going to be waves of volatility in the energy and the equity markets. So all of those levers have been pulled now, but dollar higher, gold higher, and oil hit the 75 mark. Distillates blew out. LNG for Europe up 50%. By the way, I had recommended the diesel focused trades of refiners because of this expectation, right? Distillates are already in short supply, and those are the ones that are even higher today than crude and such, up your 8, 10, 12%. Well, distillates are up 14% as that crack is flying. Muted rally, relatively speaking, in crude. European gas prices are up 50% at the Qatari LNG production halts. This is going to hit Asia in particular, I should say Japan in particular. Now you know why China has been stockpiling fossil fuels at an alarming rate, and they also have lots of coal. So we're going to be looking for rotation into alternatives because this is going to be a while. Moscow, by the way, Moscow is celebrating higher prices, baby. Oh my gosh. And guess what? Massive demand for its unsold sanctioned barrels. So Russia is celebrating. Europe is absolutely not. Asia is absolutely not. And we're in day 3. And this is 3 fighter jets crashed on friendly fire. So Kuwaiti air defenses shot down U.S. Fighter jets. I woke up to that this morning. Thousands of travelers are stranded in the Gulf. The stock market basically pricing in the international travel shock and higher energy costs. Bond market is pricing out the run it hot scenario. Gold is bid with dollar. And basically all of those assets that we've talked about as protection and as tells of what was to come have absolutely followed through. Just exactly how it played out. So we really don't have an easy time of it from here because there is a lot of put protection that will monetize. There are a lot of headlines that will come in that will cause the algos to gyrate the market. So think about de-escalation headlines. By the way, Trump said yesterday, Iran wants to have a call, wants to have a talk. And it took a few hours, but Iran said, absolutely not. We have no interest in negotiating. We don't believe you. We were in good faith negotiating and you attacked us. So there's no talks going on. None. zero. So we have, however, headlines in de-escalation, headlines in regime shifts. Trump is losing power every single day that this continues. This is only day 3, and it is important to highlight that there are allies that are so angry. And this was the report that I had written, Prepare for a Protracted Middle East War, even before I knew if this was real, right? This had just hit when I wrote this Saturday. Even before Ayatollah Khamenei's death was produced in a headline, but with no confirmation. I was writing this. I said it won't matter. We're still going to have a protracted Middle East war. Iran is not going to de-escalate. Trump has trapped us. So what happens over the weekend? The Saudis are coming out going, hey, what's going on? You were supposed to protect us. We bought your weapons, U.S. You're putting Israel first. The Middle East sponsors these U.S. military bases, and we're under fire. Dubai is in lockdown. Our LNG facilities are going offline. You're hitting our economic interests. You're hitting our safety. They're not happy at all. So is this all to protect sex trafficking or pedo ring or fraud and corruption? Yes, but it's really, really very, very dangerous to the US dollar. So big picture, security guarantees by the US go hand in hand with reserve status. This is not a one and done. Nope, not at all. So in my humble opinion, anyway, that's it. We're going to have to deal with the fallout, in addition to the AI fallout, in addition to whatever happens with foreign carry trade risks unwinding, which I think is a little early, with currency risks for darn sure after this bounce, with energy costs, etc. So for right now, congratulations if you protected. Again, the assets that I saw rising, dollar in a knee-jerk reaction, bonds also, there'll be a good short later. Equities falling. Thank goodness for Nvidia dumping 10% intraday post earnings, because that's really nicely going into that 171. Energy higher, and in particular, all oil and gas stocks, if you didn't play the energy card specifically. And basically, this is not volatility suppressing, but they are going to try and do just that. They're going to try and keep it down. And of course, defensive stocks are hot fire flames. So oil is going to be in play for a few bounces, I think. This was my monthly, if you remember. I've been sizing this MACD coming back up. And then of course we get escalation, and it's pretty darn obvious that we're gonna have a little pop. But it's massive resistance up here. It's also forcing countries to go into renewables. Maybe the US is very, very stubborn, but the point is, it is absolutely more beneficial for coal plays and alternatives as oil price percolates higher. The global falling oil demand will help offset the intensity of, or the height. There's also hope that de-escalation will occur and the Strait of Hormuz will open. By the way, it is open to Russia and Chinese ships, just nobody else. And they have bombed already a few of them that aren't Chinese and Russia, obviously. So it's the extent at which, or the length of time at which the strait is closed and intensity of the war, but likely this is already hitting a world of EV migration, electrification, falling global oil demand, so it will not be as pronounced, for example, as 2008. So I don't see that, but I do see lots of volatility in this space.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.